Hi, everybody. We're back. Jane and Jim from Real Estate Resource Home Loans.
Hey, everybody.
Our podcast, the Loan Lowdown. We're going to talk today about your credit, understanding your credit, just a few things.
Some of the myths.
Myths, yes. Misconceptions.
How to maybe fix it. Where do you even start?
Yeah.
I think that could be different for everybody.
Yeah.
You know.
Absolutely.
You get those phone calls sometimes, what can I do to fix my credit? But we don't even really know what's broken on the credit. So, it's like, we're not doctors by any means, but it's like going to a doctor and saying, you don't feel good. Can you make me better? But then you can't really answer any of the questions that the doctor's asking you, So kind of have to have that exam first, I think, to try to figure out what's wrong with you. Where with us, we kind of need a report to look at.
Yeah.
Or at least a good conversation. We can usually gain a lot just by a conversation with the buyer.
So the first thing I think we should talk about is the different types of credit. There's a consumer credit model, and then there's what we use.
Let's call it a real model.
A real.
Yeah.
Yeah, it's true.
A real one. And ours is no different than any other bank.
Correct.
I think if you go way, way, way back, it helps people understand things a little bit more. When we first started writing loans, there was no way for a buyer to even look up their credit.
No.
There was no annual credit report, free credit report, Credit Karma. They didn't exist.
No.
And banks, lenders, whether it be for a car, renting an apartment, buying a house, they don't have to share the credit report with the consumer.
No.
So, like I know back in the day, I'm certain there were people that were misinforming somebody their credit score and never had to prove what the score was that they were actually pulling. I think there was a lot of fear put into buyers. Like, I pulled your credit and it was a 600. You better not go anyplace else and have it pulled, because if it goes down, I can't help you. When indeed the credit score could have been 700.
Yeah.
But there was no way for a buyer to be able to prove that.
And that law has changed.
Yeah, so it's all very different now.
Better for the consumer.
And look what happened. You get the Credit Karma, Credit Wise.
All your credit cards offer some sort of credit pull for you.
Correct.
To monitor your credit.
And it's always considered a consumer model. Consumer model. And I think what people don't realize is that consumer models for credit scores are just marketing tools. It's just to market to you.
Yeah.
And unfortunately, that marketing, I would think, is from like that lower 600 score all the way down to as low as scores go. That's their target audience.
Yeah.
I made the mistake a while back of signing up to Experian, and it's very important to understand that TransUnion, Experian, and Equifax, the three bureaus that we pull, they also have their own consumer models.
Monitoring.
Yeah, so it's still you're still really just looking at a consumer model. You're not really looking at what it is that we would be looking at.
And they don't tell you the difference. They just say, we'll help you by letting you see your credit and fixing things, and then they solicit you for everything that you need.
That's all it's about. So I made the mistake of going on to Experian just to check my credit to see what my buyers go through when they're on these sites.
Right.
And there wasn't a day that went by where I didn't get 1, 2, 3 emails a day from Experian trying to sell me something. My favorite was when my wife and I went on vacation. We put a few $1,000s on a credit card, so we weren't using cash. We come home with the intention, of course, of paying off the credit card. But when I got home, I was, buried in emails from Experian offering to help me get out of credit card debt because they're monitoring my credit.
Your usage.
So if I use my cards and pay them off, there's no marketing for Credit Karma for me.
No.
But they're trying to sell bankruptcy.
Really?
They're trying to sell bankruptcy. You could use an attorney to get out of bankruptcy and turn this into a lead.
Yeah. And don't be fooled. Even if it's from Equifax, Experian, or TransUnion,
it's still a consumer model.
Yes, it's still so many people it's Experian. Isn't that what you pull? And I have to explain.
There's different
That's
models
the consumer.
within, correct, and we don't look at it. So are those sites garbage? Well, I think they're good for content.
Yeah.
So, Credit Karma just informed me that I'm shopping for a Maserati, but I'm not. Or somebody opened up a Victoria's Secret card in my name and I didn't. I have to check with my wife first to make sure she didn't do that.
Yeah.
But so for content, I think it's good.
Yes.
And we've figured out a couple other tools to use it for. Where a buyer pays down a credit card and there's going to be a spike in their score, but you're waiting to find out when it's going to report to the bureaus. And really, the second that it goes zero balance on Credit Karma is a good sign to us that maybe it's time to reissue this credit report and see what it is that we're working with.
Correct.
You know, there's other things, guys, on a credit report that that can be scary. For example, a little bit back, they stopped putting public records on credit reports. You may have seen commercials on TV. We're removing public records from credit reports with the goal of increasing people's credit scores. And I'm sure that did increase a lot of scores for a lot of people. But the problem is now there's judgments that we're not made aware of. We pull your credit. We don't see a judgment. We have no reason to believe that you'd have a judgment. We are required to ask if you have a judgment. And if they say no, well, then we move forward. And then all of a sudden, Title pulls a judgment search, and now there's a judgment. And I've gotten calls from the buyers. I've gotten calls from the realtors. I've gotten calls from title companies. How come you didn't know there was a judgment? And I have to remind everybody that judgments are no longer part of a credit report. And you're kind of blinding the wrong people. You shouldn't really put the blinders over something that could indeed be real.
Right.
Now, we do a lot of loans in Indiana, a lot of loans in Illinois. We do some business in Florida as well. I've been to closings in Illinois where they're pulling a judgment search just before closing.
And so then there's nothing you can do.
Yeah, you're sitting at the table, a judgment shows up. They don't know if it's theirs or not, so they have them fill out a name affidavit, which is more info, social security number, date of birth, where have you lived for the last 10, 20 years, have you ever been married? And then they determine, okay, that's not this person, or maybe
it is
this person.
Yeah.
And now, you're dealing with a judgment at the closing table.
Yeah.
So I think taking those off is kind of a bad thing.
It definitely is.
Especially
because not
for us.
everybody answers honestly. Do you have any outstanding judgments?
Yeah, I
That's
think
just the truth.
I think people think that maybe they only have to get through us. So if they convince you that they don't have a judgment, that it's not going to be investigated.
Correct.
Everything we do is investigated.
Right.
Unfortunately, we can't take people's words for anything. Everything has to be proved up with documentation.
Yeah,
right?
They want proof of everything.
Yes. It's not uncommon to get a condition for a buyer to write a letter of explanation to explain something and provide documentation that supports it. Okay.
So here's another thing, what lenders are looking for in your credit. So
it's not just the scores.
No.
I think a lot of loans get denied because loan officers get caught up on the score. They look at a score.
And they don't look further.
They don't look at the body, correct.
Yeah.
So just a perfect example, 800 credit score, disputed item, disputed item, disputed item, disputed item, disputed item on a credit report. I don't care if you have an 800 score with 50% down. If everything on a credit report is being disputed, you're not going to get that loan.
And you have to explain why you're disputing.
Correct. And ultimately, in most cases, you end up having to remove the disputes.
Correct.
Then the score goes down to a 540, which is the real score.
Right. And somebody told people, just dispute everything, which is wrong information.
There's a lot of credit repairing agencies out there. Their main goal is to just dispute. And when you dispute items, this is, again, another situation where you have to dial the clock back, because years ago, when you disputed an item on your credit report, that's you basically having your day in court. You're saying, I was not late on that car payment.
Right.
And what they would do is they would remove that trade line. They would remove that loan from the credit report, and it would be pending an investigation to determine whether you were late or not. Once they figured it out, they would put it back onto your credit. And of course, if they determined that you were late,
late payment.
It's back on there, correct? And your score would go down. But in the time that you took it off, the score would go up. And then when it would go back on, the score would go down. So I think the goal in those days was to close the loan real quick.
And then
before the negative stuff showed back up, right?
Yeah.
So now it's different. Now when you dispute an item on a credit report, it leaves it on the credit report.
As disputed.
We can see it, but it takes it out of your scoring equation. So if you have an 800 credit score, and then you have a late car payment, and your score goes down to 600. If you dispute the late payment, your score goes right back up to 800.
Right.
If you're asked to remove the dispute, which in most cases you will be, the score is going to go right back down to the 600. So there's rules on what you can dispute and what you can't, but just disputing all negative things
is not going to work.
Is not going to work, correct.
No.
It's actually really bad advice, and unfortunately when people go to credit correction places, they dispute everything, they see a score go up, they tell their friends, all their friends start going there, and it's just a dispute nightmare.
Yeah, no, it literally is.
Just a dispute nightmare.
So in what lenders are looking at is your payment history, your credit utilization. They're looking at the length of credit history.
Which is why it can be tough for somebody 18 years old to have a really high score.
Oh yeah.
Yeah.
And then inquiries, your recent inquiries.
Yes, which is a very small percentage. So, you know, Jane and I looked up some of these percentages, and payment history is 35%.
Right.
Credit utilization is 30%.
Correct.
So let's talk about that. You have a credit card with a $30,000 limit. You've got $30,000 on it. You're at 100% utilization.
Yeah. So pay down your cards.
The crazy thing is if you have a $25,000 card, let's say you got 3 of them, and they're all maxed out.
Yeah.
You have $75,000 worth of credit card debt. If you have 3 credit cards for $200 limits and they're maxed out, that person has $600 worth of maxed out credit cards. It's the same effect on the score.
Yeah, it doesn't matter the amount.
Yeah, so you have somebody with 75,000, you would think their score would be lower. Somebody with 600,
correct.
And it just doesn't work that way.
No.
Typically, somebody with those higher balance cards probably have several other cards
that are high balance.
That are high limits, maybe with lower balances, higher balances, you know. But when somebody only has a couple small credit cards, which we are dealing with a lot, those cards being maxed out are tanking the score, and it might only be $600 to raise that score back up to where it could be.
Correct.
You know, a lot less than 75,000.
Yeah.
Mix of credit. You know, I love talking about revolving versus installment.
Yes, this is huge.
Yeah. You know, what we look at a lot of credit reports, or even during speaking to a customer, Jane, is it uncommon for somebody to say, well, I always pay my car on time?
Yeah, always. They always say that.
Yeah.
Always paid on time. They want to make it clear that they paid on time.
The car is always paid on time.
And why is that?
Well, most cars are paid on time because it's called secured debt, and if you don't pay your car, it gets repossessed.
Correct, they come and get it.
So your car, a boat, a motorcycle, an RV, a camper, jet skis, wave runners, a mortgage.
Yes.
These things get paid typically on time.
Right.
Because it's secured debt.
And they can take
that item that you purchased. And nobody wants to lose their car, nobody wants to lose their boat.
So what's an example of unsecured debt?
Credit cards.
And what happens?
Or sometimes bank loans as well, right?
Yeah.
Well, with the revolving, which is where you're going to get more boost from your score.
Correct.
All right, you can pay off a lot of cars, you can pay off a lot of houses, but if you don't have that mix of some revolving debt as well, and I think where our true behavior comes out on our revolving debt.
Right.
Because let's face it, if you go to Kohl's and you buy a toaster oven, Jane loves this one, if you don't pay your Kohl's card, they don't come and take your toaster oven.
No.
No.
Isn't that strange, right? They don't come and get your toaster?
No, because it's unsecured debt.
Right.
I've had buyers say to me, well, the reason I don't have revolving is because I pay all this interest. You'd be so surprised with people that don't realize if you pay your credit cards off in full, you don't pay interest.
Correct.
But what ends up happening is somebody puts $300 on a credit card, they pay the minimum payment, which is $25. and then they're confused on why they still owe $300. Maybe
no,
$310.
Three something.
Yeah, $310, $315, right?
Yeah.
Because your $25 minimum payment didn't even cover the interest
right.
that was on that. So if you can't pay them off in full, you need to send them chunks. $100, $100. Ignore that minimum balance.
Yeah.
You know, you'll pay on it for the rest of your life if you're paying a minimum balance.
Correct.
You know, let's wait until Big Macs are 2 for $5. I know that's not the case anymore, right?
No, I don't think so.
We're probably like 2 for $20. But if you put it on your credit card, now it's like 2 for $1,000.
Well, yeah.
If you're going to make these
right
minimum
away.
monthly payments, right? So,
yeah.
Keeping those credit card balances low. Don't close them.
No.
You tell people get those credit cards paid down.
Yeah.
And then you want to close the account. Don't close the account.
You know, when all my kids first went to college, we opened them up a credit card, and they were terrified of it. I'm like, just listen. This is how it's got to be.
Yeah.
Go get gas.
Buy
when
groceries.
you come home the next day, pay it off. You know you have the money. And my daughter still to this day panics when she has a balance.
Yeah.
And I'm glad in a way because it's teaching her how to pay off her debt and keep her score right. And I don't think our younger generation is being taught any of that.
It doesn't seem like it.
No.
You know, I've got buyers, they don't really understand the difference between a debit card and a credit card. It's, you know, they don't understand that, you know, if they put $300 on a credit card, if they don't pay that off, that whole balance is going to be obviously tacked on some interest.
Yes.
There's a lot of these other things where you can go on to Amazon and you can buy something and split it up
in payments.
In payments,
Mm-hmm.
and they're really hoping that you can't do that.
Right.
Because if you can't, then it's interest on the whole entire amount, correct?
Great,
if I'm not
right.
mistaken, I believe that's how that
and
works.
And that is showing up on credit reports.
Yeah, some of them do, but you know where else they'll show up, even if they're not on a credit report, is they show up on your bank statements.
Yes.
And now we're trying to chase down Klarna.
Because lenders have figured that out, and now they want to see a statement.
Truth in lending.
Everything.
They want to know how many installment payments it is.
Yes.
You might have to add it into your debt ratio.
What's the balance? Everything.
Yeah, I remember when we used to only have to look at credit reports to determine somebody's liabilities, but today it's like we have to look at bank statements.
Everything.
You know, we have to look at bank
and
statements.
And people only send one page. We don't want to see just your balance. We need to see every page.
Yeah, we're looking for everything.
Yeah,
we're looking for everything. What about pre-qualification pitfalls when it comes to credit reports? Things that might get missed on a credit report. It always seems like it's the same things. Over and over and over and over. If a loan gets denied elsewhere and then we get it, we adopt this loan, it's like I can guess sometimes what was missed. Student loans.
Always.
With the big zero payment because the loans are in forbearance.
Mm-hmm. And nobody thinks they need to count that payment.
Yeah, we have to count that. We can't count a zero on student loans. Disputed accounts, we talked about that.
Yeah.
But that's another one to where somebody looked at a credit report, they seen a score, but they didn't go down and look to see if there were disputes.
All the way through.
Correct.
The 20 credit inquiries on the bottom.
Correct.
You have to explain.
You know, like for example, if I'm looking at a credit report and I see that somebody had their credit pulled at Ford, that Ford might not be on their credit report yet, but they very well may have bought a car.
Right.
So then I need to, you know, reach out to the person and say, hey, listen, did you buy a truck? Yes, I did. Great. I need to add that to the debt ratios. Mm-hmm. We already covered judgments, but that's another one. That's a pitfall today.
Yeah.
On, you know, and a lot of times customers, they don't seem to know what judgments are. Like I'll ask people, do you have a judgment? And they'll say, no, I don't think so.
Well, they think it's a judgment/collection.
Correct. And
they think they're the same.
You know, if you don't pay a bill, then that place can send you to a collection agency.
Correct.
If they really want their money, they could file a judgment against you.
Right.
So a lot of times I'll ask somebody if they have any judgments, and if they pause or if they hesitate, I'll ask them further, were you served?
Right.
Did you get a, you know...
You're not going to get served for a collection.
Ordered to go to court?
Right.
Did you go to court? Did you lose in court?
Right.
You know, so that, you know, if they're not showing up on credit reports, we have to ask a little bit more to try to dig in and figure out if there might be a judgment.
So what else?
Let's get rid of all the bad. Yeah. Sometimes when we're interviewing people and we ask them what their credit scores are, we'll hear things like, well, there's things on my credit, which makes me believe that that person may think that credit reporting is only negative things,
information and not the
negative.
positive.
Right, because when somebody says I've got things on my credit, they don't say negative things. They just go, I've got a few things on my credit.
Correct.
I've got a lot of things on my credit. I've got accounts that,
right.
I mean, my credit report is probably 30-something pages long, but there's a lot of good things on my credit, which is what helps drive a good score.
Right.
You know, so if you think about it like this, if you have nothing on your credit, no good, no bad, what would your scores be, Jane?
NA, NA, NA.
NA, NA, NA. Not applicable, not applicable, not applicable. You
Right.
have no scores, which really isn't a very good position to be in.
No.
Now, we'll have another podcast on doing loans for people with no scores.
Right.
But right now,
Yeah.
NA is not really a good thing.
Mm-mm.
So if you've got nothing on your credit, NA, 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 no scores, and now you get 5, 6, 7 bad items on your credit, and your score goes down to a 500, from NA to a 500. If you make those bad things all go away, where do you go back to?
NA, NA, NA.
You're back to 0.
Right, because you don't have any.
There's nothing good.
There's no good.
There's nothing good.
Yeah.
So, you know, it's kind of funny advice, I think, sometimes, but if somebody has 2 collections for $500 a piece, and they have $1,000, I'm probably, and a lot of times they're charged off, right? So these collections are charged off,
right.
meaning that they didn't get their money, Chase didn't get their money, Wells Fargo didn't get their money,
right.
or whatever, you know, they didn't
right.
get their money. They filed a collection, nothing happened, they were sending letters. They finally, you wore them down, so they write it off their books as a loss.
Right.
At that point, they're not chasing you down for the money anymore, okay?
No.
It's still on your credit, but they're not knocking on your door. I don't think they knock on your door.
No, they don't. They call you.
Yeah, they'll call. Yeah, they'll call. They'll send you letters, pink ones.
Yeah.
Yeah, red.
Oh, do they?
Red, yeah, last attempt. So.
The pink letter?
The pink letter, yeah. You got to open the pink ones.
So then what would you tell somebody to do with that $1,000 that they have instead of paying those 2 $500 collections?
I would tell them to go open up 2 new secure credit cards for $500 a piece, and to leave these charged off collections. Just leave them, because getting those secure credit cards is going to start to boost a positive score,
right?
Which is what you need to do. An older charged off collection did its damage. It did its damage a long time ago, and obtaining new credit is going to help.
Right.
There's ways to jumpstart it even quicker, right? You've got authorized users.
Right.
This one's changed a little bit. It still works. Don't let anybody fool you and tell you that it doesn't work. You just have to be a little bit more selective today with authorized user
with who
accounts.
you're using, yeah.
Yeah, so like for example, when my son was 18 years old, I very easily could add him onto my credit card as an authorized user. He boosts a score practically overnight. He can then go out and get his own credit cards. Once he's had those cards, I can go ahead and take him off my card as an authorized user. I would have never gave him the card.
Yeah.
I would have got it, activated it, and probably cut it up. But it would still help him to generate a score. Not all credit cards work like that today.
No, they don't.
No, so like a lot of your banks, like, and I don't know this to be a fact, but I'm most certain that like Chase may no longer report to the authorized user.
Oh, because it...
Maybe the same as a Wells Fargo, Citibank, but like Discover, typically,
They do, because I'm on my parents. That's the only way I know that.
Yeah, so that will do it. All your store cards, right? Your Buckle, Victoria's Secrets.
They don't.
I think they do, actually.
Oh, they do?
Yeah. You know what? The best thing to do would be to do what? Call up and ask the simple question. Do you report to all 3 bureaus for the authorized user? If they do, go ahead and add them onto the card.
Right.
Now, where you have to be careful is that if all your credit is authorized user, you're going to have trouble getting a loan.
Correct.
Yep. I ran one through an automated system where the buyer only had authorized user accounts. And when I ran it, there was a message that said to check the Fannie Mae selling guide in regards to authorized users. So I did. I was very excited because it was approved in the automated system. But then when I saw that little, make sure you're following the Fannie Mae guidelines in this manner, I went to the guidelines, and it said that the underwriter has to determine if this is all somebody else's credit or yours. And it actually states, like, if they've got more authorized users than they do their own, that would be a problem, and that score really isn't a usable score. Well, in this case, all of it was authorized user, so that was never going to work. So you want to still have your own credit if you're going to get authorized user credit.
Right.
Even if it means going out and getting 2 secure credit cards and then going on to somebody's card as an authorized user.
And here's the thing, too, about the secure credit cards. You have to really still pay attention to a secured credit card, because I've seen people with secured credit cards have late payments.
Oh, absolutely. Don't ruin your credit.
So
yeah,
to just
you know what I think, Jane? I think that sometimes because it's a $200 card, you give them the $200.
People think once you spend
it's like a debit card.
Yes, that's what they think.
If I use my card, $50 comes off, and I still have available limit of $150. But no, you owe $50, but they're going to say you only owe $10 minimum monthly payment, right?
Right.
Use it, pay it off.
So people think though that the money they gave is the money that's coming out. And
like
that's
a debit
not
card.
what it is.
It's not.
It's in case you don't make your payments, they're going to take the money that you put down as security.
100%. And if you get a secure credit card and you use it the way you should, use it, pay it off, your score is going to start to increase. That credit card company will typically then reach out to you to turn it into a regular credit card, refund you back your deposit. And if they don't, you could just obviously just cancel that, get your deposit back, and then you're on the path to, better cards. I know this is going to sound bad, but who cares what the interest rate is on the secure credit card? I'm going to explain that, because when you're looking for a secure credit card, you're going to see some that have lower rates, but high fees, like monthly fees, yearly fees, okay? But it's a lower rate. But then you're going to see some that have a higher rate, but they don't have the fees.
None,
You don't want the fees. Who cares what the rate is? Because if you use it and pay it off, the rate doesn't make a difference. You're not paying interest on the balance because there is no balance, okay? So I always inform people, don't look for the 9.99 with the monthly or yearly fees. Take the 21.9 with no fees, because ultimately the fees end up becoming like interest anyway, in a sense.
Correct.
Yeah, so I wouldn't really care about what the interest rate is. What about scores required for a loan? This is a little bit interesting. We had the myth, right? We did that, Jane. The myths of lending. So, for example, a lot of people think that FHA requires, what's the myth, Jane?
Oh, 620.
Yeah, 620. Where in all reality, FHA goes down to a 500. It has to go through their automated system.
Right.
And we've seen low scores go through automated systems. They've got reserves, a nice large down payment, possibly a co-signer, maybe not.
Right.
Some reserves right in the bank, a nice down payment, low debt ratios. These things can help loans go through. We do go down to a 500, but it does take compensating factors in other areas to make that loan go through. If a bank is requiring a 580 or a 620 or a 640, or actually anything higher than a 500, that's overlay. And we've talked about overlay in the past as well. VA does not have a minimum credit score. They just don't. There's no minimum credit score requirement for a VA loan. You're going to hear again, we need a 570, we need a 580. That's overlay. But technically, VA does not have a minimum credit score. But I'm going to tell you right now, VA's got a lot of, they do not like recent derogatory credit. You can have a 700 credit score with a late car payment in the last 12 months and have it not go through VA's automated system. even though the score's decent, it doesn't like recent derogatory credit.
Correct.
USDA is a 620. That is a manual underwrite, but 640 otherwise.
Yeah.
And then I can't believe that I'm actually going to say this, but for conventional loans right now, technically today, there are no minimum score requirements for a conventional loan. It used to be everybody on a loan needed a 620. Then they went into we're going to average.
Yeah.
If somebody has an 800, somebody has a 700, they're going to average that to a 750. But right now, it's all up to the automated systems. So we pull credit, we get pay stubs, we get W-2s.
Yeah.
Full loan app.
And that's hard because a lot of people call and say, what kind of score do I need? Well, it depends. And there's no better way. We can't answer it until we have everything together.
Yeah, I mean, I could have a 680 have trouble.
Right.
I can have a 530 go through. What's the difference? The 680's getting gift funds. The lower score, they have $1 million in the bank.
Yeah, it's
you just don't know.
Right.
Somebody's putting down a substantial down payment. Maybe they're just putting down a decent down payment, but yet they have $500,000 in a 401k. Mm-hmm. Now, we don't need them to liquidate the 401k, but just having that additional money can make a huge difference.
Right.
So it's really up to these automated systems. And unfortunately, there's no checklist like if this and this and this and this,
then we're good to go.
You're good to go.
Yeah.
It doesn't work that way. There is no, I pay a lot of money for that list if it existed. Yeah.
And also with a lot of these down payment assistance programs and a lot of these towns, people are calling and they tell them, oh, we don't have a score requirement. But then when they come to us to get approved for that loan, we do have a score requirement.
For the down payment assistance programs,
yes,
correct.
that we have to get through an automated system. So
that adds risk.
Yes.
You know what I'm saying?
Yes.
So I could run a loan through an automated system to where it's your own funds and it goes through.
Right.
And then you can change those funds to gift funds and it doesn't go through. Maybe part gift and part your own and it goes through. But now you introduce down payment assistance.
Yes.
And it factors that into the final decision. So if somebody really doesn't have any money and their scores are a little bit on the lower side, that down payment assistance may not solve that problem because the automated system's going to decide that. It's going to make that decision.
So that's a big thing. I know a lot of people are coming to us for the down payment assistance, but a lot of people don't qualify for it because of their score.
Yeah, they may not qualify because of their income.
Yeah.
And I'll tell you right now, most of the borrowers that I've had that don't qualify for down payment assistance are typically two things: score, debt ratios.
Yes.
Debt ratios is a big one. You get somebody that really wants to push that amount that they can be approved for. It drives up the debt ratios on the loan.
Right.
It still goes through, but then when you look for down payment assistance says there's no way we're giving down payment assistance to somebody with a 56.9% back-end debt ratio.
Right.
Yeah, which I completely understand.
Right.
Yeah, I completely understand that. Should you pay off debt before applying for a loan? I don't even know how to answer that question. I mean, if I'm not looking at a credit report, I really don't know what to tell somebody. I don't know. I guess I would want to know how many cards do they have, what's their limits on all their cards, and what's their balances on all their cards. If somebody tells me they've got 2 cards, both with low limits, but they're both maxed out, I'd probably give the advice of paying that off.
Yeah.
It could take 30 days for that to report to the bureaus.
Right.
That's where we use Credit Karma.
Yeah.
Did Credit Karma report a lower balance yet? They did? Okay, great, let me re-pull this.
Correct.
Not really a bad idea.
What else? Checking your own credit score can hurt you. Like Credit Karma, the Experian, the Equifax, doing it through your credit cards. Can that affect you?
No. Yeah, it's not a hard inquiry.
No, not at all.
What about us pulling it? Does that affect your credit? It's kind of funny, right? Because if I go to Wells Fargo and they pull my credit,
right,
and it's a 700, 700, 700,
right,
and then I go to that same day, I go to another bank and pull my credit. What would they pull, Jane?
700, 700, 700.
Correct. And then if I went to Jane to do my loan and she pulled my credit, even a few days later,
yeah,
700, 700, 700.
Correct.
But yet that borrower will tell us every time my credit was pulled, Credit Karma said my score went down.
Right.
Well, how's that possible if 3 banks all pulled 777? Right? So having your score pulled multiple times for a mortgage-related situation does not lower your score like people think it does. Credit cards, car payments, we've all heard the nightmare story where somebody goes to buy a car, their credit's not so perfect, so they pull their credit 19 times.
Yeah, because for some strange reason, by the 18th time, it might have got better.
Right, yeah. So when they're working down their list of lenders, right? Here's our better lenders with our better rates, and then they just keep going, and then finally they get to the 30% interest rate, and then they get them covered. Just stretch the car payment over 30 years. And
another thing is closing old accounts will boost your credit. That is not true.
I mean,
if you've had a credit card for 30 years that you've paid on time, that has zero balance and a high limit, that's helping your score.
Yeah, we always get these little tips when you pull someone's credit. I don't even know what that section's called, but it tells you why it's not perfect.
Yeah.
Okay, why it's not perfect. I've had that say because of too many inquiries, but they have had no inquiries. I've had it say, too much credit card utilization, but it's zero balances. The funny thing is that person has 800 credit scores, but it still has to show you why isn't it perfect? And people sometimes they get hung up on that. Good buyers with really high scores, they hate when they see those negative
now
things.
People are calling us and saying, my credit utilization is amazing. It's great. Well, who told you that?
No, Credit Karma. Yeah, Credit Karma.
So,
So very, very, very interesting.
Yeah.
We wing this, guys.
We do.
Yeah, Jana, we talked for a little bit before we hit record. Our goal is to go live.
Eventually. Sign up for our YouTube channel, please, and then we can.
Yeah, I think our next one is going to have some real estate agents that we're going to kind of do in a panel setting.
Yes.
Let us know what you like. We don't care what you don't like.
We actually don't care if you like it or not. No, just kidding.
Some people have watched it. I've even had some of my own personal buyers tell me they saw our podcast and they got some good information from it.
That's our goal, is to help everybody, to give you guys some direction. We'd like you to call us, of course. Use us, of course.
Yeah, let us know if you want us to cover something specifically.
Yeah.
We'd love to do that. We've got our clear to close pumpkin. We'll give credit to Mike Forrest at our office. Mike did this in about 3 minutes.
Yeah, amazing.
Yeah.
I would still be trying to carve the C.
Yeah, he did a really good job. So that's our clear to close pumpkin, which brought me some good luck because I got some well-deserved clear to closes here very recently. Getting busy.
Yeah.
Yeah, we're getting busy.
Thing.
There's no doubt about that. We are getting busy.
Here, I'll say it again. The Fed rate was cut. What does that mean for us, Jim?
Well, that means that my credit card's interest should be lower, which doesn't matter because I don't have credit card debt at the moment. It is before the holiday.
Please do not put mortgage rates are going to be low because the Fed cut the rate.
Yeah, so it affects home equity lines of credit, right? Car loans, credit cards.
Correct.
Mortgage rates don't typically follow that. I mean, could it? Mostly the 10-year treasury is what we look at to see what mortgage rates are going to do.
That day that happened, I'm pretty sure our rates went up.
Yeah, rates in the industry went up the day that they announced that.
Yes.
And there's always a bit of a pause. Now, rates are a lot better than they were recently.
Of course.
We've got a lot of people looking to do refinances and stuff like that. One more little word of advice here. During the holidays, we tend to see a lot of people spending money, running up credit cards, because it's holiday. We understand that, people buying presents,
Absolutely.
But this is a good time to if you've got buyers that are buying homes, it is a good time to talk with them speak with them about, potentially spending down payment money or spending gift money.
Mm-hmm.
And
listen, have them reach out to us. We're glad to help you and your buyers. If you know anybody who needs advice, we're happy to help.
I always felt like, like that your children definitely would like a wonderful Christmas with some new toys and some presents. But I think a nice, beautiful house with a backyard and, and a place that would probably make them pretty happy too. So,
yeah. So thanks for watching, and message us. If you have any questions, give us ideas for anything you want to learn about or have us talk about.
Yeah, please.
Yeah, that's it. Thanks for tuning in.
All
Happy Halloween.
Bye, everyone. Trick or treat.